Thank you for finding time to join us on today's episode of Tax Matters. My name is Olumuyiwa Matuluko, and with me on today's episode is Christina.
Hello, viewers.
We begin today's episode by commiserating with the good people of Kano on the passing away of the late Emir Alhaji Ado Bayero, who ruled over the ancient city of Kano for more than 50 years. We recall that in April 2008, we went along with members of the Joint Task Board on a courtesy visit to the late Emir in his palace. We were struck by his regular presence and his warmth and hospitality towards his guests. We also join other Nigerians in congratulating the new Emir, Alhaji Sanusi Lamido Sanusi, who needs no introduction. As we had in the late Emir, we know that we also have in the new Emir a royal father that one can count on when it comes to finance and taxation. And you know that is very important to us on Tax Matters. Today on Tax Matters, we are going to tell you two stories of two events that are related in their subject matter. You know that from time to time, the Federal Inland Revenue Service engages in holding of seminars and workshops to educate stakeholders about their duties, their rights, and responsibilities under the various tax laws. Recently, the Light Tax Office Oil and Gas Downstream held a workshop on value-added tax and withholding tax returns and remittance for companies in the oil and gas downstream sector. A few days later, the Government Business Tax Department held its own workshop on activities of the department with ministries, departments and agencies of government in the South-South zone. Now, what is the connection? What is the relationship? Value-added tax, withholding tax, and permit us to add pay as you earn from staff emoluments. Ministries, departments, and agencies have agency responsibilities with the tax authorities for deduction of value-added tax and withholding tax at source, as well as pay as you earn from staff emoluments, in much the same way as companies in the downstream sector of the oil and gas industry also have agency responsibilities. The two workshops therefore had the same goal: to get ministries, departments and agencies and companies to perform their role as agents of tax collection. Christina, it's your story.
There are two main sectors of the oil and gas industry: the upstream and the downstream. The upstream sector comprises exploration and production of oil and the production of gas and servicing of petroleum operations. The downstream sector is made up of transportation, refining, marketing, and gas utilization. The Petroleum Profit Tax Act (PPTA) applies only to income from exploration and production of crude oil activities, while the income from the activities of gas production and contract services are taxable under the Company Income Tax Act (CITA). At the FRS, administration and collection of taxes from the so-called oil and gas companies are carried out by three offices: LTO Upstream, LTO Downstream, LTO Servicing. On Friday, 21st March 2014, the LTO Oil and Gas Downstream organized a sensitization workshop on VAT and withholding tax returns and remittance for oil and gas companies in the downstream sector.
The workshop is aimed at educating, informing, and reminding both taxpayers, consultants, and also to awaken our awareness as FRS.
Mr. Bamidele identified the challenges associated with filing withholding tax and VAT returns in the downstream sector of the oil industry, to include: what products and services are subject to VAT and withholding tax, what should be the base for applying the applicable withholding tax or VAT rates, VAT refund process, and double filing burden placed on oil and gas customers by Section 10A2 of the VAT Act. These challenges, according to Mr. Bamidele, are not only responsible for low compliance, but also accounts for most of the disputes. Mr. Didi Ogedengbe is the tax controller, Light Tax Office, Oil and Gas Downstream.
Withholding tax refers to the deduction of tax at source from payment due to benefiting parties, and by paying the parties for onward remittance to relevant tax authorities of the benefiting parties, where the deducting party is deducting for a limited liability company or residents in Abuja and Federal Capital Territory, or the police, as it may apply. It will go to FRS and where it is for individuals and enterprises, the relevant tax authority is the State Internal Revenue Services. Withholding tax is an advance payment of the ultimate income tax liability of the taxpayer, and it is available for offset against ultimate tax assessed.
Mr. Albert Folonsho of Pedabo Associates presented another paper on transaction taxes, administration and management.
The concept of value-added tax, maybe I should just explain briefly, has to do with paying tax on the value added. It says that you're supposed to pay tax on the value you have added to whatever your input is, and it is the difference ordinarily that you put to the Federal Inland Revenue Service or to the federal government. So which means we have what we call the output-input mechanism. The output being the value-added tax you have charged on your supplies, while the input being the value-added tax you have suffered on your purchases or your input to your production process. Of course, we are familiar with the fact that the burden of VAT is on the consumer, so it's strictly on the final consumer. If I pick on residential building or probably rent and even land, we have had this situation where people sell land and claim that since there is no value that has been added to land, that they should not be liable to VAT. But of course, what we are taught, or what the revenue always says, is that if it is not on the list of exemption, then it is what? It is liable to VAT. So if you sell land and you have not been charging VAT on your land, not to even talk of property, or you are into property business, I'm sure there's so much of liability that has accumulated, for such a company. Because if it is not exempt, it is what? It is liable to VAT.
Now what be this? Make it sound high where you. The thing where you side me too much, calculation is where okay.
Madam, it correct now. Now the price be that.
You are playing with fire, so me I know say they never search fast for picking things. Oh, you want to play me while you? You want to teach me a bit?
Madam, now everything with the add back on top. Now so with the seller.
Madam, you dey correct o.
Good day, madam. Any problem? Problem there.
The thing be say una not supposed to charge VAT for baby items and other things wey dey for VAT exemption list.
Sam.
Chai! This one na wayo receipt o. Correct receipt suppose contain the things wey you buy and the VAT wey dey on top. Then other items wey not get VAT, you go put them separately. Madam, I apologize, You go change that.
Change that. You see say we know wetin government around.
To pay VAT dey compulsory. Now government they use to make our life jolly, to collect and pay sharply to government. It is correct.
FIRS, it pays to pay your tax.
The next one is tax invoice. You must issue a proper VAT invoice. You cannot make a claim that your cost or your invoice is VAT inclusive. For me, it is actually wrong. You cannot. Some companies, when they want to dodge or when they want to avoid paying the VAT, particularly for rent, most landlords, whether corporate or individual, claim that their rent is net of all taxes. If you have to pay any VAT on any rent, it means you have not finished paying your rent. A proper VAT invoice must show clearly the VAT element of the transaction. We have to address withholding tax continuously so that the taxpayers will not see it as a separate burden or as a separate tax that is being levied on them. The taxpayer is merely an agent of collection on behalf of another taxpayer, and it should remain like that.
Yeah, okay. Yeah, waiting be this.
The deduction now for withholding tax.
Withholding guinea. Look, if you not pay me my correct money today, hey, Munu get made you half for.
But madam, should be your company paying income tax.
Yes, that one I enough load for me to carry. Why you not want come add join them again?
You see, withholding tax now advance payment for income tax. So when you do some kind of job like contract, we go remove small from them when we won't pay you.
I don't go contract am up. I bet tell me another.
No. We must pay the money to FIRS within 30 days, and they will give us withholding tax credit note to take show say you don't pay part of your income tax in advance.
So
now to help make the money where you go pay at the end of the year small.
So this withholding tax one too, it be like part payment of one.
Exactly, madam.
I beg you, give me my check.
Remember, come collect your credit note.
Withholding tax now for we own good.
FIRS, it pays to pay your tax.
Thereafter followed a robust question and answer session.
I believe that there is CGT on disposal of some assets, which can either be that of the company or individual. And when we charge CGT, and when a taxpayer is charged CGT and he remits, then if he's going to charge VAT as well, won't that be discouraging?
I'd like to know if FIRS issues credit notes for taxes withheld by banks on interest income.
Accounting for VAT deducted at source. I don't know if the FIRS can look at the way and manner this money is being accounted for, whereby the person which the VAT is deducted at source can be protected, like withholding tax. If you deduct withholding tax at source, at the point of payment, at the point of remitting that money to the FIRS, the money will automatically go directly to the individual's taxpayer's account. But in respect of the VAT, when you said, give me the evidence that this VAT that you deducted from me has been remitted to the FIRS, there's no way any client can give an accountant just to do a photocopy of a schedule and a bulk receipt. And I liked your name. And I believe that since 2007 that the FIRS has started that issue, they supposed to have designed a system within their portal, whereby as I am making a remittance for the people that have deducted the VAT on, that money goes directly to their TIN number on their portal.
When there is reverse charge, which we call output VAT, is it your tax? You are not the one paying. All you can lay claim to is your input. Your output, the output, the so-called output, is not your tax. You are not the one paying. Therefore, you are not entitled to the receipt. Therefore, the receipt is not yours. Unlike withholding tax, credit note is your own. You suffered it. But for VAT, you didn't suffer anything.
Adeola talks about disposal of asset. That, of course, when you dispose of an asset that ordinarily what you should be paying is capital gains tax. Yeah, correct, it's capital gains tax, but it is also a transaction that is liable to VAT. When you are computing your capital gains tax, the VAT will not come in because it will come as part of your sales proceed. So just take the sales proceed net of the VAT to calculate your capital gains tax, but it is a vatable item.
Withholding tax on bank interest. Of course, there are credit notes that should come out from that, which should be available for you against your company income tax.
Then the question as to whether credit notes were issued on interest when banks are charged. I think it is very clear, it has been answered. When they remit, the process requires a schedule to be attached to the amount they are remitting. And as long as schedules are attached, then credit notes will be printed. Whether you now collect your credit notes from the bank, that's a different thing entirely. But going further, when ITAS becomes fully implemented, the moment the credit note is uploaded, your account, that is your K card, your ledger with FRS, will automatically be credited. And when the liability or assessment comes, then it offsets it.
Interesting.
Yes, indeed.
The discussion or the debate, if you like, is ongoing. We only stop learning when we pass on to the great beyond. As we said earlier, the next story is also on enlightenment. It was a workshop that was held on agency responsibilities, this time of ministries, departments and agencies as agents of deduction and remittance of value-added tax and withholding tax. Again, it's your story.
On the 27th of March, the Government Business Tax Department of the FIRS organized a sensitization workshop on activities of Government Business Tax Department for ministries, departments and agencies in the South-South Zone The workshop was held in Port Harcourt, Rivers State. Mr. Oofani is the Director, Government Business Tax Department at the FRS headquarters.
The department, that is the Government Business Tax Department that is putting this program together, was created to specially focus on taxes resulting from the activities of government. Ordinarily, we know that government doesn't pay taxes, especially when you mention things like income tax. But we realize that government itself can help itself by being agents of collection of taxes from whoever they do business with.
3 papers were presented, all centered around the roles and responsibilities of MDAs as collecting agents.
By scope and limitation, we are going to focus on transactions of MDAs, even though there will be spillovers into corporate discussions. We are going to look at them on the basis of the different laws. We start with the Federal Inland Revenue Establishment Act 2007. Section 25 empowers the service to appoint government agency to collect tax. Section 24 empowers the Accountant General to deduct taxes at source. Where liabilities are standing against MDA, the Accountant General is empowered by this section to deduct at source. Section 40 makes failure to deduct or remit an offense. Section 32 stipulates penalty for failure to deduct or failure to remit. Company income tax guides the activities of corporate transactions, but there is a regulation that focuses on deduction at source. So the company income tax, withholding tax regulation 1995, section 1 lists persons qualified to deduct tax at source. Section 4.1 of that requests that evidence of remittance will be submitted to the relevant tax office. The first schedule to the regulation listed the transactions that will attract withholding tax. Another legal framework is the value added tax, Cap V1 LFN 2004. Section 9.1 of that act provides that every government agency must register as agent of tax collection for the purpose of tax collection under this act. Section 9.2 provides that contractors are to provide evidence of registration. Contractors to get award of contract must show evidence of registration with the board. Section 31, government agency to remit VAT charged on them. Well, of course, we know that the MDAs are the consumer of services provided by contractors. And so, by that concept of consumption tax, the MDA are supposed to bear the burden of that. And so, as soon as they are charged, they are supposed to remit that VAT charge on them to the River VAT Authority.
The papers elicited robust discussions from the audience.
My question is based on the compliance and sanction. In a scenario like this, we awarded a contract, payment is done, taxes are deducted, but for payment becomes a problem in the sense that you take this check for the taxes deducted to the bank will tell you your papers are not complete, the documentations are not in order. And when you go back to the Federal Inland Revenue to ask you the TIN number, and the customer or the contractor refuses to give us this TIN number, it becomes a problem for us to now release the check. Who is to be blamed? Is it who is to be sanctioned?
Supply of petroleum products like diesel to an MDA, is it exempt from VAT and withholding tax payment?
On what conditions do we deduct direct labor tax, and of what percentages do we do that, sir?
I
want to draw our attention to some difficulties that I come across in the field where I have to consult for my clients who basically are doing jobs for MDAs, and they are unable to trace, just like Doctor said, they are unable to trace their withholding tax, huge withholding taxes that are deducted at source.
You know, proper record keeping is one of the responsibilities of the agent as well as the bank, because we're expected to keep records of your transaction. And when you fail, that burden will rest on you. But like I said before, when I was talking about remittance and issuance of receipt, the Federal Inland Revenue Service will not and cannot issue receipt for monies not remitted. And so, which was why I said, as soon as you remit money through a bank, make a follow-up and be sure that you have your receipt. In the process, you will discover whether that remittance went through or not. Whether supply of petrol is exempt from VAT and probably withholding tax. Where there are contract arrangements with third party, contract is the basis for withholding tax. And that's where there are agency arrangements other than transaction at yes, it's across the counter transaction that has no contract documentation. You may not be talking about withholding tax. But VAT, the list of exempt items, they are there in the paper, and I'm sure petroleum product is not one of the exempt items. Somebody asks the condition for direct labor. Yeah, like I mentioned there, complying with the provision of relevant laws is necessary. However, let it be noted by the Accountant General Circular of 2009, all MDAs were advised that any transaction above 200,000 must be given out by way of contract.
Few additions to what the doctor has responded. Presently, there is no VAT on petroleum products. That is for sure. But then we need to be very careful with this. On the products, yes, there is no VAT. But some have hidden under that broad, description, petroleum product, to include haulage of petroleum product. And this is the confusion we always find. Haulage of petroleum product is not the same thing as petroleum product. If it is PMS, if it is agro, if it's kerosene, they are all exempted from VAT. But if you have a contract to move that product with your vehicle from one point to the other, that contract is liable to withholding tax and VAT.
The DFS from one of the local governments in Akwa Ibom has, when we don't have TIN, how do we remit? The question to ask is this: why would you, as a government agency in this current dispensation, award contracts to somebody that does not have TIN in the first place? If the law says you are under criminal liability for not demanding for tax clearance of such a contractee in the first place, so that means you have failed from the word go. If it doesn't have TIN, there's no way you could have a valid tax clearance certificate. I hope we are getting our point. So please, let us cooperate with the efforts of government. We don't need to go into sanctioning. You should not award contract to a person, a company, anybody for that matter, who does not have a TIN. It's so basic.
Also, on the issue of the difficulty with TIN, providing TIN, I have made bold to say this a number of times, and that is this: that look, if you have difficulty, either as an agent, or the bank, in remitting the tax, while you have the money with you, lodge the complaint with FIRS in writing, please, so that At any point in time, if anybody is coming back to impose interest or penalty on you for not remitting, you have your defense. And I'm not too sure, FIRS, in the face of that difficulties that have not been resolved, go ahead or impose penalty and interest. So that's the window I see for that.
Interesting. You know, they say knowledge sets you free. We do hope that on today's episode of the program, we have been able to empower you with the knowledge necessary to make life easy for you as a taxpayer. We thank you most sincerely for watching. And from Christina,
thank you for watching, and bye for now.
Have a blessed week ahead.